What's up, everyone? Welcome back to the channel. I'm Albert Chavez, your real estate agent, and welcome to the Archive experience. This is your first time. Welcome to the channel. I appreciate it. Today we're going to be talking about how I can save you the most amount of money by allowing you to have some insight on how you should find your mortgage that is right for you. So let's dive right in. When shopping for a mortgage, you have to make sure that you look at every single option. Just like if you're buying a car or a computer, you're not going to just buy the first one that you see. So the entire point of today is for me to allow you to broaden your viewpoint and say, hey, let's find you the best mortgage. So there are different options when you're shopping for a mortgage. First thing you should do is when you have decided to find a home, when you've decided that you are going to buy a home, it is best to look into shopping for a mortgage. And this means that you need to find the best rate. And when you are shopping for a mortgage, it's best to compare every single asset of it. Finding the best mortgage that works for you will allow you to, one, give you the best financial deal, and whatever you are in need of, it'll allow you to it'll progress in your advancement in wanting to get and buy a home. So, home mortgages are available through lenders, and there are many different types of lenders, which means there will be various costs depending on which lender you go to, whether it be a thrift institution, a commercial bank, credit union, or just even a broker can help you find a lender. This means that you will get different rates and different costs at each one. Of course, they'll mostly be the same. It's just some lenders will charge certain fees depending on how much they want to obtain, and this means that you need to find which lender will work best with you. And everything in the home buying process is negotiable, which is a benefit for you. When you're buying a mortgage, you need to shop around at different types of lenders. And this means at each lender, because of the free market system, they're going to have different quotes. It's kind of like if you go to Target or Walmart, they might have the same product, and it might vary in price. And the competitive market allows for different quotes at each one, depending on what type of service they want to give you, and also on what type of loan you will wanting to receive. You can also get a mortgage from a mortgage broker as well. Although they won't directly give you the money, they will basically, in essence, get a lender for you, which could be nice if you want a little more laid-back approach. However, it is imperative for you to ask different questions if you go this route, because you need to understand if you're going, if you need to understand if you're talking to a broker or to a lender, or if they are synonymous. And if you also want to go this route with a broker, just like when you are finding the best lender for your situation, you should also look at many different brokers as well, because like I said, they might quote you different stuff, and they might quote you different amounts depending on what resources they have available to them. But no matter if you're going to work with a lender, a broker, or both, you need to understand what is what. In the mortgage process and the entire home buying process, there are a lot of complicated steps, which is why I'm here to help you ease your way into it. And although there are different situations for everyone, it's important to understand what information is key. So if you don't understand something, you have to ask, because the lender, because there's a lot of complicated aspects to it. There's a lot of words that you may not be familiar with, such as, it could be something like, what is the difference between a fixed versus an ARM and adjustable? It could be something like, what is the difference between a fixed mortgage versus an adjusted rate mortgage or an ARM mortgage? So you have to ask a lot of questions during each step of the process. Like I mentioned earlier, you want to get as much information so that you can understand each part of the process. Not only do you want to get information just from a resource like me, you want to do it from each lender that you talk to, because one might be more experienced than the other, or one might have a certain quote and why they might do things a certain way. And the reason I'm telling you this is because it'll save you a lot of money in the long run. What types of fees are associated with each lender specifically, and how much down payment you will need for whatever program you decide to go through, whether it be a conventional loan, a government sponsored loan. So this will help you, one, understand things a lot more, and two, figure out how much home you can afford in the long run. This is a really crucial part in your home buying process, because it's not just about finding out how much each monthly payment will be, because then if you just want to look for a certain amount of monthly payment, then that might just give you a really generalized amount in terms of the loan. You want to look at which loan you're going to, how long the loan term might be, and like I said, what type of loan you are interested in finding. Some questions that you want to ask the lenders that you are talking to is how much the APR is, which is the annual percentage rate, whether it's a fixed or an adjustable rate mortgage, which means if it's fixed, that means during the entirety of the loan, the rate will be exactly the same, which is easier when you're calculating how much mortgage you will pay during the life of the loan, versus an adjustable rate mortgage, which will generally have a lower rate at the very beginning, whatever you lock in, and then whenever that changes with the market, after a certain time, you want to kind of talk to your lender and see if they have a good estimate on what that rate change might be, and if you will be able to afford it in the long run. So when you're talking about a mortgage, there's this concept called points, and you may be thinking, I have no idea what these are, unless you're referring to my fantasy league. So points are how a lender is paid, or a broker is paid. Points are usually linked to the interest rate, so usually the more points that you have, the smaller your interest rate will be. So you want to ask your lender to put points in a dollar amount, which may be easier for you to understand, and will also lay out the terms more clearly. And you can also check local newspaper readings or local online resources that you may have to see what the current points are in your community. So when you're talking about a mortgage, you have to include a down payment, and this basically says, I want to commit to this type of loan and this type of responsibility. Depending on what program you end up doing, whether it be a conventional loan, a government sponsored loan like FHA program, or lots of first time home buying programs, it can range anywhere from like 0% in some cases to 3.5%, all the way to 20%. So when you're talking about a loan, you have to include a down payment. And this basically says that you are committing to this type of responsibility. So when you are putting down a down payment, depending on what type of program, it can be anywhere from 0 all the way generally to about 20%. And why I say 20%, which may not seem like a lot, but when you're dealing with a house, which is hundreds of thousands of dollars typically, that can be pretty expensive. So since some lenders do require 20%, if you're doing some type of conventional loan, this can be a lot of money, and not everyone may have this capital, such as people who are buying a home for the first time, or typically younger age groups may not have this type of capital to buy a home at 20%. And this introduces the concept of PMI, or private mortgage insurance, which basically ensures the lender that you will end up repaying all of the mortgage back. And basically you just pay an interest premium. You pay a certain amount of insurance depending on the lender, X amount of dollars that'll be added onto the mortgage until 78% typically of the loan to value ratio is paid off. And basically you only pay PMI, or private mortgage insurance, if you don't meet that 20% requirement that some lenders may provide. And like I said, this depends on what type of program you're doing. There are many first-time buyer programs that you don't have to put as much as 20% down for a down payment, which is very beneficial, obviously, because that means you may be able to save more in the long run. And since buying a home is very strenuous on your budget, this may help for the initial costs that come along when buying a mortgage. I would recommend asking your lender or your broker more information about how much you have to put down for a down payment, what PMI, the private mortgage insurance, would cost if you went that route, how much it would be added to your monthly mortgage, and just understand how much funds you need in order to provide a down payment that you will need to buy your future home. There's FHA, which is Federal Housing Administration. There's VA programs, which are for veterans. And there's also rural community. I know I've talked about a very generalized approach when finding a mortgage, but overall, if I haven't emphasized this enough, you have to just ask as many questions as possible during the entire process of buying a home. For the lenders that you want to make sure that you shop around for lenders as well before getting a mortgage and see which one is right for you in terms of how their rate is, in terms of what programs they know and they can do, because each lender will be different and quote you different amounts. You also want to ask your lender, once you choose one, what program will be right for you in terms of how much money you need in terms of a down payment, whether there are special programs based on anything you've done in the past. Like I mentioned before, there are Federal Housing Administration and VA programs, which are government sponsored programs that will help you if you're a veteran or if you qualify under FHA policy, or just any conventional loans that they may offer, or smaller programs that are a little less well known. And then when you actually find your after you've discussed what type of mortgage that you have wanted to create, or if you discuss what type of mortgage that you want to buy into, everything in the home buying process is negotiable, even the mortgage. And you may be like, how is this even possible? Well, it could be on how the lender gets compensated. Maybe they can take out a certain fee and replace it somewhere else, so when you talk to your lender, you can ask them if you can replace the fee or if you can diminish one of the fees, so that you can get a more affordable mortgage. And after you've figured out what rate that you want, you have to make sure to lock it in, because if not, during the rest of your home buying process, it could fluctuate, and sometimes it may help you, but other times it may not. So unless you want to gamble with something as expensive and as big of an investment as buying a home will be, I would suggest locking it in. It may cost you a little bit more, but in the long run, it will be very beneficial for you. To recap this entire video, when buying a home, you want to shop and assess all your options for finding the best loan possible. You want to compare every situation and then negotiate to get the best deal possible and save you as much money as you can. And don't be afraid to ask any questions that you may have. There's lots of resources on the internet. Ask your lender, ask your real estate agent, because there's a lot of information out there and it can be really intimidating. And if you have any questions, please leave them below. Thank you so much.